President Bush unveiled a major economic stimulus package today, but our next guest says he doesn't expect to see another major bull run in his lifetime, and this stimulus package certainly is going to kick anything into gear.
When we come back, we're going to be joined by Peter Grandich, editor and publisher of the Grandich Letter.
We're in the midst of a challenging period, and I know that Americans are concerned about their economic future. But our economy has seen challenging times before, and it is resilient. In a vibrant economy, markets rise and decline. We cannot change that fundamental dynamic.
But of course, he is hoping that a $150 billion package will change the dynamic for the consumer in the States right now.
Trying to turn around a super tanker, but, you know, will $1,000 or so worth of tax relief for each family do it? Will that be enough?
I don't think our next guest believes that it will do anything at all, but instead of me saying it, let's check in with him. Peter Grandich joins us from Vancouver. He's the editor and publisher of the Grandich Letter. Nice to see you, Peter.
Great to hear you guys.
Peter, let's start off with the Bush stimulus package. What do you make of it?
Well, it's a drop in the ocean. It's nice political news, but it will do little to stem the real problems that underlie this problem. As much as people think it's the mortgage hit that we're having, it's really the fundamentals of America has been robbing Peter to pay Paul. We're tapped out. We don't have the political or the economic wherewithal to withstand a normal downturn, which is going to create a much deeper recession than normal. And now we have a lame duck president, what many are starting to think an inept Federal Reserve chairman, and now Paulson, on his third try with two other past attempts to fix the mortgage industry, has come out with a very weak plan. I'm concerned that people that we depend on, foreigners that support the United States with financial dollars, are coming very concerned that no one's in charge here.
Do you think that even the stimulus package is going to have a little effect? I mean, it's not. It is small, given the trillions of dollars we're talking about when it comes to the economic flows that go back and forth between countries. But still, it is $150 billion.
The United States has had a false wealth effect through the 80s and 90s while we binged and lived way beyond our means. The stock market supported us with above-average returns, and people borrowed against the future and took their gains and plowed it and bought bigger homes and bigger stuff. When that went bad at the turn of the century, the real estate market took off. What we didn't know at the time was it was taking off on false legs. Now, where does America turn to? It doesn't have a stock market that's going to be roaring. It no longer can use its house as an ATM, and it finds itself with little or no savings, has a lot of stuff, owns very little of it, and owes a lot out. I really don't think $500 or $1,000 or, quite frankly, $5,000 is going to change things.
Now, Peter, to your credit, this is not a new position for you. We had you on back in October when you brought out a report, and it was called Man Your Battle Stations, in which you warned an unprecedented economic tsunami was going to hit the States by 2008. A lot of calls you made were right, and to your credit, you called right the '87 crash. You called right the 2000 meltdown. You were a bear then. Tell me what your position is right now on the markets and where you're putting your money.
Well, I will tell you that most of the credit I need to give is to one man in the United States. His name is David Walker. He's the controller of the currency. I would urge everybody to get familiar with him. He's really the head bookkeeper of the United States, and he's been warning for over 3 years of everything that's unfolding now. And to his credit and other work that I've done, I really don't think we are going to see any good economic periods for as long as I can see out. I said earlier to producer, I don't think we'll have a mega bull market in my lifetime. Now, I'm in my early 50s. I hope to live a long time, but I think what we're going to go through is going to be a multiple of decades where the United States greatly underperforms all other areas of the world. So if you want to err and be a live chicken versus a dead duck like I've been, then a lot of your money has to be in cash. I still think gold is good, although on the very short term it's overbought. But outside of the gold market and a few special situations, I'd rather see people build a cash position than any other type of position.
So if right now, if I'm a retail investor, I'm watching you talk right now, Peter, I've got $10,000 I want to put in. You're saying treasuries?
Well, I think first you're heading to get the knife out listening to me, but after you've done that and you decided not to cut your wrist, I would tell you that this is not a good time. We will have a rally here. The market's getting very oversold. You know, we had a big downdraft even up here in Canada. I expect we'll get a bounce next week. But if you're looking out past the next few weeks and few months, I really think the stock market has to go a lot lower. It's like pendulums. Pendulums swing from extremes. We had a great swing from the 1970s to the end of 2000, and now we have to swing the other way. So we'll have to get undervalued. And if you start to look at historical undervaluations, the Dow would have to get down to 7,500 before we can call it cheap again. Do I think you can go there? Yes, I think there's a chance, but I think there's more of a chance of being 7,500 than 20,000. So I'm going to err on the side of caution.
You say, and you put out an outlook for 2007, and I know you said in your October letter, Peter, that that corporate debt was going to be grabbing the headlines in 2008. That has happened. We are watching that happen. Let me ask you, what are going to be the headlines over the next 6 months?
Well, I think the big untold story still, Kim, is people keep focusing on this mortgage problem in terms of how it affected the investment banks. What they haven't concentrated on is where these mortgages actually went into, the income trust, the pensions, the 401ks, all around the world, which people right now are sitting thinking that something is going to generate a certain income, don't realize that these things are going to have to be greatly repriced and lower. A lot of people who still don't realize how much this mortgage crisis has hit them, that is yet to unfold.
Do you think, I mean, we're hearing some people, I know one person I talked to said, watch, they're going to see the housing recession turn into a consumer depression. I mean, do you see it going that far, or is it just going to just hover lower for a long time in recessionary or low growth versus depression?
Well, I don't think we're going to have a depression because things that were not available in the depression are now some safeguards. But I do think we're going to have a deep recession. I also think we're getting very, very concerned now that we have political paralysis in Washington, irregardless of whether Republican or Democrat wins. I think David Walker has demonstrated we have such enormous fiscal problems in the United States that are going to take multiple years to fix. And unless we get a Congress and a president who decides to make those hard choices, we're going to suffer more. And none of the members, both in Democrats and Republicans, other than Ron Paul, has really addressed the situation.
Last question for you, Peter. The people that I talk to who are bulls are saying that, yes, the U.S. economy is slowing, and, yes, it could even enter a recession. But you know what? China is doing so well. It has decoupled, and more importantly, it is building its own infrastructure for its own citizens, not just to satisfy American demand. Do you not buy into this or don't see the influence as great?
Well, I know some of those people, like Frank Holmes, who was on early, who's a very brilliant and a good friend of mine, but I don't think Frank grasps is how close China now is to a bubble itself. And always at the top of bubbles, things look the best. I think the other surprise story you'll talk about a year from now is the downturn in China. It'll be marked by the Olympics. It's not that they're going to negative growth, but we're not going to see the strong growth that we once seen. And without it, we're going to have a worldwide slowdown. And in many areas, including the United States and Canada, which is going to be impacted by the United States, we're actually going to see a recession.
Peter, great to talk to you as always, even if the topic is a bit gloomy. We'll have you back to see how the predictions did. The last ones did pretty well.
Thank you very much.
Peter Grandich, editor and publisher of the Grandich Letter. He joined us from Vancouver.